Given these numbers, given we're an expansionary for both services and manufacturing, is the American economy accelerating?
It certainly looks like it is, yeah, defying all expectations, really. We've got faster growth, and most notably in services, which we've seen for a couple of months now, but that's now being joined by a revival of growth, just modest, but in the manufacturing sector as well. So it looks like we're off to a good start in the second quarter, growth accelerating on the first quarter.
Walk us through, like, what's the strength? Like the strength across the board, orders, pricing, outlook. Just walk us through all the highlights for the U.S.
The U.S., which is a pretty similar story worldwide. It's just the US seems to be ahead of the curve a bit, as usual. But what we're seeing here really is service sector led growth. And when I say service sector, it's not across the board. There's a big spur to demand that we're seeing for consumer services and things like travel and tourism. So this is the first year, don't forget, that we've had, if you like, a tourist season kick off this year with unfettered global travel. You've not got to worry about PCR testing. You've not got to worry about quarantining, anything like that. And people have booked in advance in the knowledge that this year is going to be a safe one to travel. And we're seeing that across the board here in all the countries that we're looking at. It's driving growth quite strongly. What we're also seeing is financial services activity really coming up quite nicely now. The dark days of late last year, when financial conditionings were tightening very severely, those conditions have loosened. And that's brought financial service activity up high with it, from things like the banking sector to real estate. It's all turned a corner. So you've got this nice headwind, tailwind, if you like, from the pandemic. But so this is driving this growth now.
Chris, if I can jump in here, because what you're saying to me, what it sounds like to me, is the Fed has a long way to go. Do you think that's fair?
It's looking like it. In this respect, but there's so many caveats to this growth, because if it is indeed all based on this pandemic tailwind, that's going to fade. That's going to fade as we go through the summer, and what we're left with in the second half of this year really is the economic fundamentals kicking in. Everyone's got through this bit of exuberation, if you like, and we're left with the fundamentals of high cost of living. Yes, inflation's coming down, but the price rises have been there, right? Yeah. You've got the higher cost of living. That's kicking in, and higher interest rates, of course. Those fundamentals are inevitably going to increasingly feed through to weaker growth as we go through into the second half of the year.
But, you know, I mean, I just look at the new orders in the U.S., the highest rate in 11 months. Businesses passing on higher costs to consumers. We're looking at the fastest jump in output prices in 7 months. The degree of confidence in the economy also rising. None of this says to me recessionary fears.
At the moment, no. This is what we're going to have to wait for and see how it plays out. In terms of the inflation picture, things have shifted. You're getting strong downward price pressures in manufacturing as the supply's improved, but it's the reverse in the service sector, where supply's tightening. We've gone from worrying about getting enough components on ships to getting enough people on airplanes now. US airlines are maxed out. They can't put any more people on there. The demand is there. So what happens? You hike your prices. And this is what we're seeing in the service sector now. So a complete shift from what we were seeing a year ago for goods inflation rising. Now you've got the constraints in the service sector.